then. We're just checking the chat here, making sure everybody can see it. Okay, moving on. Okay, so we have the two tax credit programs that we're going to talk about today, and one of them actually just received new guidance on Friday, April the 3rd. And that new guidance is included in this webinar today. So the first program we're going to talk about is the employee retention credit. Everything that has to do with it, from when it's effective, the eligibility, who it applies to, the maximum amount that you can receive, and how you go about claiming it. We're going to talk about the same things as it relates to the Extended Family Medical Leave Act and the required sick pay that we'll talk about when it went into effect, which was just last week, the eligibility for taking those tax credits, again, which employees it applies to, the maximum amount that you can take, and again, how to claim it. The good news is that both programs, you claim it exactly the same way, so that's nice. So first and foremost, the employee retention credit. So this is the program we have not had a webinar on. This actually went into effect on March the 27th, so it is in effect right now, and it counts towards wages paid after March 12th and before January 1 of next year. To be eligible to take the employee retention credit, you can be a nonprofit organization or any size business. So this particular credit is not specific to small business owners. It is for all size businesses and nonprofits. If, however, you have applied or have received already the Paycheck Protection Program loan, then you can't use the same wages that you pay the Paycheck Protection Program and also receive retention credits. You can't do both because that's double dipping on the same wages. And also, this state and local governments are not eligible for this particular credit. So in order to be eligible, you have to be a business that's affected by COVID-19, and here's the evidence to show that you were affected. You have to have seen a 50% or more reduction in your revenues when compared to the same quarter in 2019. And your eligibility ends when your revenues go back up to at least 80% compared to the same quarter in 2019. And of course, if you've been fully or partially suspended or shut down due to COVID-19 mandates, such as non-essential businesses, then obviously you'd see a reduction in your revenue and you would be eligible as well. So here's an example of how you would determine if you are eligible or not, assuming you're so here we go. So first quarter, second, third, and fourth last year, this is the amount of revenues that you pulled in. And this year, these are the amounts that you pulled in. Okay, so for first quarter 2019, you pulled in 20,000. First quarter 2020, you've only pulled in 18,000. So this is a 10% decrease that makes you ineligible for the retention payroll tax credits. However, in second quarter 2019, you made $30,000, but this year, let's say in second quarter, you only made $10,000 due to COVID-19 shutdowns. So that's a 67% decrease, which hits the above 50% decrease that you had to become eligible, so therefore you're eligible. Third quarter 2019, you had 30,000 in gross revenues. Third quarter 2019, 22,000 in gross revenues. So that's a 27% reduction. That still keeps you eligible because once you've hit the 50% or more reduction in revenues, you then have to go up to back up to 80%. So at this point, you're only at 73% of your original revenues from 2019. Therefore, you are still eligible to take the tax credit. Although you'll see in fourth quarter that you only had a 5% decrease, so therefore you are now ineligible again. So everything is in comparison to 2019 as far as eligibility to start and end the employee retention tax credit program. So the who is, we talked about any employer and nonprofit business is eligible, and they're going to base how they calculate who you can actually calculate tax credits on based upon the average number of employees you had in 2019. So if you had an average of less than 100 employees throughout the year of 2019, then the employee retention tax credit is good on all employee wages that you paid in 2020 from March 12th forward. Again, as long as you hit that 50% reduction mark. However, if you're an employer who averaged more than 100 employees in 2019, then that credit is only good for wages paid to those who did not work during the 2020 quarter that you're eligible. So in other words, if you're a larger employer, then, and you paid people to essentially not work, you continued to pay them even though you were closed or you had reduced revenues, but you still continued to pay them. So those people you paid who were not working, you can take this employee retention credit for. But everyone that did continue to work, if you averaged over 100 employees, then you cannot take the employee retention credit. Okay, so the maximum amount that you can receive is $5,000 per employee in a calendar year. It's based upon 50% of their qualifying wages. And I'll show an example here in just a minute. Qualifying wages includes the following: their actual pay, of course, the health plan premiums that the employer paid, as well as any tips or commissions that were paid to the employee. So you would be able to calculate half of that amount. Qualifying wages does not include taxes, other insurance, or retirement. So no 401k payments that you made, no payments you made to unemployment insurance or liability insurance, and no taxes that you paid. None of that is considered in the calculation for qualifying wages for the employee retention tax credit. Okay, so how do you go about claiming this credit? Well, the good news is that you basically just do the same thing you've always done when you are paying your payroll tax liabilities. Just use Form 941. So 941, as most of you on the call know, that is the form that you use to pay your actual tax credit, or your tax liabilities, I should say, every month or quarter, how often you pay it. So you'll just continue to use that same exact form. Now there is a new form here, Form 7200. So I'm going to show that to you real quick here. There we go, that's the right one. So this is Form 7200, Advanced Payment of Employee Credits Due to COVID-19. So the reason you would use this form is if you don't have enough money to cover paying those people who are off work. If you don't have enough money to do that on the front end, then you can request an advance of your payroll tax withholdings. So it's a very straightforward form. You put in your organization's name and information, which quarter you're filing for, and then down below, you'll check which form you normally send in. And then it'll ask you down here in Part 3 to enter your credits and your advance request, the amount that you're actually asking for. So you'll just follow that step by step, sign it and send it in. And you may send it in electronically. You can also fax it in right here, fax your completed form to this phone number. Okay. It's claimed The way that it works is this particular retention tax credit is claimed against the employer portion of Social Security taxes paid. So that's how it's going to apply the tax credit. It's going to be against the Social Security portion of your payroll withholding taxes. And notice 2020-22 tells you directly from the IRS that there is no penalty for withholding the payroll taxes for this purpose. Meaning, here in the example we're going to show, you owe a certain amount, but then you file and you pay less than what was owed because of the tax credit. There will be no penalty for that. And should you actually have excess tax, in other words, a refund coming to you, it is treated the same as any other overpayment of payroll taxes. And so it will be refunded back to you after offsetting any other federal tax liabilities that you may owe. So here's an example. Your total payroll taxes for the month of March, let's say total $5,000. That's just the payroll withholding taxes that you would typically send in on your 941. However, in the month of March, you had COVID-19 related retention wages that you paid, as well as calculating in the health plan premiums you paid. And so let's say that totals $2,000. Well, under this particular retention plan, you can claim 50% of that $2,000. So that's $1,000. So now instead of owing $5,000 in total payroll tax liabilities, you now only owe $4,000 in payroll tax liabilities. Here's a second example. So let's say it's the month of March and your overall payroll withholdings to the feds is $5,000. That's the amount you're going to put on your 941. But you have COVID-19 related retention wages that you paid, plus their health plan premiums that you paid. That totals $14,000. You can claim 50% of that under the retention tax credits, which is $7,000. So now you actually don't owe anything, and you have a refund or a credit of $2,000 that would be applied towards other tax liabilities first, and then if there aren't any, a $2,000 refund coming to you. Okay. There is a maximum of $10,000 per employee that you can claim in a calendar year, so keep that in mind. But that's not $10,000 total, that's $10,000 per employee. That's a different one. We'll get to that in a second. So now we're going to talk about the EFMLA and the required sick pay. So EFMLA is the Extended Family Medical Leave Act under the Families First and CARES Act. And it went into effect last week on April the 1st. And it is effective on wages paid after April 1 through December 31st for the required sick pay and EFMLA as it relates directly to COVID-19. To be eligible to take these tax credits, you do have to be a business with less than 500 employees or a nonprofit with less than 500 employees. Now here's where the guidance came out on Friday that changed a little bit. So if you've seen a past webinar from me on this, this is a change. So before it just said small businesses. And typically those were the ones with less than 500 employees. But the wording in the actual bill and everything just said small businesses. Now they are stipulating it has to be a business with less than 500 employees because some businesses with more than 500 employees are still considered small according to the SBA. So now the eligibility is strictly for those with less than 500 employees. So just to give you a summary of this, in case you haven't heard, it's 2 weeks, 10 days, 80 hours of sick pay for anyone who has to be off work related to COVID-19 sickness. and an additional 10 weeks of paid leave if they are off work for COVID-19 in order to take care of a child or loved one. The question about being exempt for 50 or fewer employees is still out there. The way that the regulations are still worded is that there is no exemption unless it threatens the viability as a going concern for the business. In other words, it's going to cause your business to close. So that has not changed, and we still don't have any direction yet from the Department of Labor that I'm aware of as to how you go about getting that exemption, should that be the case. So this applies to anyone who has worked for you for 30 or more days, whether they are full or part-time. And if they are quarantined or self-quarantined or experiencing COVID-19 symptoms and seeking a medical diagnosis, then you have to pay them 100% of their regular pay rate up to $511 a day for up to 10 days, which is 80 hours full-time. If they're part-time, the calculation is based on the average hours that they typically work in a month. And you cannot, under these regulations, require them to use their other paid time off first. If they are caring for an individual who is subject to quarantine, caring for a child whose school is closed, then that first 80 hours is at 2/3 of their pay rate instead of at 100%. Now, if they have to be gone for extended periods of time, which many of us now are having to do this because of the closure of schools and some daycares, they will receive 2/3 of their pay rate if they're unable to work for those reasons for up to 10 weeks. This, however, these additional 10 weeks is capped at $200 a day for no more than $12,000 aggregate, the 2 weeks sick leave plus the 10 weeks of extended family medical leave. So after their first 2 weeks of getting paid sick pay, then they would receive an additional 10 weeks at no more than $200 a day. So how do you document this? So in the last webinar, we said there needed to be at least a memo of some sort from the employee verifying that they were off for that reason, date it, and sign it. And that is essentially what they are asking for, but we now have more guidance that specifies exactly what needs to be inside of that memo. So, and we're going to get to that here on the next slide, but you must retain all documentation and records related to this in order to substantiate the claim for the credits. So any Form 941s that you file, if you received a payroll protection program loan, you need to keep that documentation. All the memos from your employees need to be kept on file. Should you need to file a Form 7200 in order to get an advance so that you are able to pay your employees for their extended leave, you need to keep that. And of course, any payroll calculation records that you have. So to substantiate the claim, the guidance that came out on Friday says that the employee has to list the employee's name, the dates of leave requested by the employee, the statement of the COVID-19 related reason for the leave and written support for such reason, as well as a statement that the employee is unable to work, including telework, or whatever that reason was. So those 4 things have to be included in each memo from your employee. If you want to make it easy on your employees, you can, because of the mandate that's been issued and they're considered non-essential, so essentially all of your employees are not going to be working for several weeks, then you can have a form letter that has all this information in it and then have them sign it. For quarantine orders, you must also include the name of the government entity ordering the quarantine, such as the City of St. Joseph, or the name of the healthcare professional advising the self-quarantine for you or the employee. If the quarantine is not for the employee, but it's for someone that they're taking care of, then they must list the name and relation of the family member that they are caring for. If their extended leave is due to the need for childcare because they have to stay home with their children, then they have to give the employer the name and age of the child or children that the employee is caring for, the name of the facility that is unavailable, such as the name of the school or the daycare, a representation that no other person will be caring for the child or children during the EFMLA time. And this was a question we had at one of the previous webinars on whether or not both parents could take time off. So this clarifies that no, you can't both take time off for caring for your children at the same time. So maybe you guys split the time doing that. And if the child is over 14 years of age, then there's a specific guidance that says you have to provide a statement that circumstances exist that require you to provide care for the child that's over the age of 14. And again, you have to maintain the records and documentation of all of this information. And the IRS says you must keep it for 4 years. So here is what is considered wages for the tax credit as it relates specifically to EFMLA and required sick pay. And these wages are calculated differently than the employee retention wages were calculated. So wages, of course, include their pay, but it also includes the group health premiums that were paid by the employer and the ones that were paid by the employee if they were pre-tax. However, it does not include the contributions paid to health savings accounts. Now, of course, if the employee's portion of the health insurance premiums are paid post-tax, then they are not included with the calculation. But if they are pre-tax, then both the employer and employee's portion are both counted towards wages. And then the Medicare tax is also included with the calculation for wages, but it does not include the Social Security tax or state taxes. So in the past, the way it was written was that all taxes were included. Now it has taken that out and more guidance has been issued. And so it's strictly just these things that you see on the screen. Their wages, their health insurance premiums, and the Medicare tax. So here's the example. I have 2 examples here. So let's say payroll taxes for all of April, $12,000. That's the amount that you would typically put on your 941. However, you have COVID-19 related paid sick time wages, which also includes health plan premiums paid as well as Medicare taxes. And that calculation is $2,000. So now instead of owing $12,000, you owe $10,000 in payroll taxes. So if you remember, the employee retention credit only gave you 50% credit. This, however, gives you 100% credit. Here's another example. Let's say payroll taxes for the month of April was just $5,000. However, you had COVID-19 related sick time paid in wages, health plan insurance, and Medicare taxes totaled $6,000. So now you actually don't owe anything on your 941. If it will show that you have an overpayment of $1,000 that will be refunded back to you or applied to other payroll tax credits that you may owe. So a few questions that I've gotten recently are, can you use both types of credits? In other words, can you use the employee retention credits as well as the required sick time and EFMLA tax credits? And the answer is yes, but not on the same wages. So if you have wages during the exact same time frame, you cannot use both tax credits. You can only use one or the other. So whichever one benefits your company more, that's the one I would recommend taking. Can I use the credits if I use the Paycheck Protection Program for payroll? No. You can't use either of the programs if you paid any of the payroll with the Paycheck Protection Program. However, keep in mind that that Paycheck Protection Program just became available on Friday. So people are just now getting funding for that. And the employee retention credit began on March 12th for wages paid after March 12th. So for almost a whole month, there are employee retention credits that you can take before the Paycheck Protection Program even became available. And what about self-employed people? Can they receive any of these credits? And the answer is yes, but they receive an equivalent income tax credit on their annual filings instead of on a 941.